So this is how I was able to achieve this. I think I had 180 pips from this trade. So if we take it like from those points to where it is currently, we made 185 pips. So how did that come about? You can see clearly that this market was selling. Then let me show you the reason why I took this buy and how I analyzed this market to get this 180 pips on USD JPY. Now you can see clearly that the market was selling, right? Why should I take a buy in a market that is not trending to the downside to get 185 pips? So this is 4-hour time frame. I'll scale it down to the 1 hour to show you what happened. Now when this market break or structure, then I knew that there will be a need for a pullback before the sell continues. So what I did was I saw this market, it was creating this for us. You know, we were on a downtrend right now. This was a low, this was a high here, this was a high here, this was another low, right? This was a new high. So we expected the next low to be lower than this last low for the trend to continue, but there was a failure at this level right here. So let's scale this down to a lower time frame to have a better view. So on the 15-minute time frame, this was the reason I decided to take this buy. The market was creating lower. After the fall, there's a big gap at this point. Then it gave us this high. Then it gave us this low. It gave us a new high, and we were expecting the next low to be lower than this, but there was a failure swing at this level. This gave us a failure swing, unable to take out the last low. For the trend to continue, we needed a lower high, a lower low, a lower high, and a lower low. But unfortunately, it didn't give us that. Instead, we saw another shift in market structure to the buy side. You remember that this was the last high, right? And we were expecting the next low to be lower than this last low, but suddenly we had this big buy candle breaking through this last high. So at this point, we'll take this as a change of character. So here becomes our shift in market structure from bearish to bullish. When you see this, don't jump into the trade immediately. Now look at what happened. When this was happening, this trade left this other block at this point, right? It left this other block at this point. It left this big fair value gap at this level. Then it went ahead to create a new high. Right now, we're expecting a higher high, higher low, because we are broken out of lower high, lower low. So what I expected next was to see this market come to trade back into this other block or fill up this fair value gap. You would have asked me, why not use this particular other block? If we go to the 30-minute time frame, you remember that the other block that led to the shift in market structure is what we always expect the market to come back to mitigate. So this was actually the other block that was left behind for this big buy candle that gave us this shift at this point, right? So I expected the market to trade down into that other block. This was exactly what happened. It rallied up, then came back to mitigate this other block at this point, right? Then the market started buying. I should have taken the buy here, but I didn't see this trade at that moment. It was much later I saw the structure, then I decided to go in for the buy. And the reason why I went in for the buy was because I saw this low was created, a new high. So for this market to continue with the bullish structure, we needed a high that was higher than this. So this will be our higher high, higher low here. So we needed a new higher high. But this market came back to sweep out this. When you're expecting a reversal in the market, there is something that is always funny. The market will create a liquidity, and a lot of early sellers will jump in. Most cases you could win and take it as a sniper entry, but in some cases the market will create that first liquidity because we needed the liquidity to move this other block that was mitigated here. So the market created the liquidity at this point, then it came back to raid off that liquidity and move up again. This was what happened. So when I saw this was the reason I decided to mark out this particular. This was my target. This was now my next target. So I expected the market to mitigate this, then to give me a buy, and my SL was just right below that sweep of liquidity. So I had my SL here, and the market actually respected. Another thing I noticed also was this. You see, when the market is reversing, it doesn't just sell, and suddenly they just start buying. No, it gives you the signal that I am not selling anymore. I am ready to start buying, and vice versa. When you see the market buying, and suddenly you see some structures forming, it's telling you I am tired of buying, I want to sell, or I'm tired of selling, I want to start buying. Now, as I looked at the market very well again, and I saw this inverted head and shoulder. Let me draw it out for you. Where is that? Okay. So I took this as my left shoulder here. No, this as my left shoulder. So I took this as my left shoulder. Then the market was unable to break it. It came to give us a head here, right? It came back to this point again. Then it gave us this right shoulder and came up here. So at this point, this level becomes our neckline. This level becomes our neckline. So we'll see, we are expecting a break of this neckline to validate this buy, right? Meanwhile, we also have a structure like another block that should have gotten mitigated, and the market will start selling, right, at this point. But what happened next? Look at it, broke this neckline. After breaking this neckline, it did not respect this other block we have here. Then the buy continued. Now, this becomes our breaker block, invalid order block, right? So we'll expect the market to break this and come back to retest. So here we'll be seeing a break and retest. So this was the point where the market broke through this other block. Instead of respecting it, it disrespected it. So after that disrespecting this other block, then it came back to retest. This is a break and retest. Then after the retest, we are having a buy again. So right now, is the market done with this buy? For me, I would say no. I am not done with the buy yet, although I have gotten to my exit points. This was where I exited the market, but I'm still expecting the market to buy more. And the reason for that is this. Let's take it down to you for the 1 hour time frame. Let me show you something. For this sell to continue, we need to close this gap, right? So when the market gets here, I want to see the reaction at this point to see if it's going to close this gap to continue with the sell, or it has shift structure completely for rebuy. But however, the market has been bullish, and we already have a shift. We already have a shift at this point. So I'm still on the sell side, but I don't want to jump into the sell yet. I am waiting for this market to pull back before I enter the sell. So what I will just look at for, I want to take my Fibonacci, then I'll take from this swing high to this swing low here. So if I'm taking this swing high to this swing low, this point becomes my area of interest, my 0.618 and 0.786. So all this area becomes my area of interest. Once I see that this market has traded above my 786, then the sell is invalidated. So I'm expecting this market to buy up to this level to join the sell. But anything that makes this market to trade above my 786, then I'll close my sell and look out for the next structure to join the buy. Do you understand? So that is how I basically do my analysis for my trade entries.
Please like and follow Joy Goldex.